Afternoon, how are we all doing? Sorry, I'm late. Been busy watching what's going on. Afternoon, everybody. Amy, JC, Virginia, David, Mumo, Gregors, Crom, Fletch, Peter. How we doing? Novelty. So we've had the CPI figures out. As expected. So we got the 0.3, which is the forecast, basically, which is exactly the same as last time. So core CPI has not moved. Overall CPI ever so slightly risen above forecast, and year on year we're 0.2 up. Unemployment has gone up. Has come down as well. So the upshot of all of this is it's less likely that we will get a interest rate reduction faster. So we're still probably talking March time, possibly April for an interest rate cut. But the inflation figure has ticked up, which is what they were expecting. We're expecting CPI to bounce on the way down. So the important thing is the core is as expected. So everything's going to plan. However, overall year on year, it's up a little bit more than they forecast, but yearly forecasts are obviously very difficult to forecast because entire year's worth of information you got to figure out. So the upshot of that is, if you look at the US movement, we had obviously the big spike to the upside, but it's all undoing. So it is slightly bullish US, but overall we're still looking at the US dollar dropping. So all we're doing is we're kind of delaying it maybe a few weeks. That's it. So I don't think the market's going to necessarily rally the US off this. And as you can see, it's not doing so at the moment. However, we will see what happens, see what the market makes of it. But it's not really bullish, not really bearish, kind of in the middle. Afternoon, Rudy, Leo, Pop Guider, Dion. Safe enough to trade us AH after big news? Yeah, so it's a whipsaw. There's a lot of volume coming across all the indices, which is all undoing. So we're basically back, not so much to square one on the NASDAQ and the S&P. The S&P is not far away. Look, the Dow is back to where we started. So nothing's changed. I think we're possibly going to get a fairly strong rally or drop on the US this afternoon, which will obviously indicate the indices doing the same. So we'll see what happens. Hard to tell. We're not really interested in direction. Doesn't matter, does it? We're interested in momentum and volatility. I don't care if it goes up or down, as long as it goes fast. That's what I'm interested in. This is a momentum breakout strategy. We want it to go quick. We don't want it to hang around. We don't want it to flip-flop. We want it, make your mind up, just go somewhere. So there's no ADRs, as you can see. We are back to square one on the S&P. We haven't hit ADR today, so there is room to the upside, room to the downside. There's plenty of room. But we'll see. You never know. Afternoon, Brian. Morning, Meh. Afternoon, Meh. DAX and FTSE, I've got a problem. Remember we were talking this morning, those that were in the live room this morning, about margin. I'm on a margin call. 68%. I'm only trading two indices with 0.5% risk, and I'm margin called already. So this is the downside of trading with 1 to 30. It's so hard to trade on 1 to 30. I'm margin called on two indices. So I've dropped the risk down to 0.3 for tomorrow. I had a feeling this might happen. The problem is I've banked a nice amount of money this morning. I've banked $1,500, but it instantly puts me into $2,800 of drawdown, because exiting the short hedge and then re-adding to that hedge, I have missed multiple orders. I had an exit here on the DAX. I couldn't take it because I couldn't get my aggressive drawdown control position on. I could not take too long positions at 0.5% risk here. because what I'm saying is I'm 0.5% long. I want you to go another 0.5% long, so 2% long. So I've asked the market to take me 4% long. Broker won't allow it. Not enough margin. So I'm still in these. I did have to re-hedge, and I've had to take a loss on that. I re-hedged there and exited the hedge when I saw the pullback. So at the moment, I have managed to get the aggressive on there. It's still in drawdown. I've turned the EA off, though, which is why these figures aren't updating, because I need to manage this manually now. It's in a right mess. So this afternoon might be a bit flicking all over the place because I need to monitor this. Let me just see if I can get out that UK 100. 7.3, 7.4. Okay, so that gets me out flat, doesn't it? So I'm going to do that. So basically I can exit flat, which is what I'm doing. Okay. So no profit this morning on the Frankfurt session. To be honest, that's a lucky escape. So although I love Darwin X, it's so hard to trade with that margin. Really is hard. So you're right, out of those, that's done. Job done. Flat. Okay, so we're off with the US. NASDAQ long, Dow long, S&P long. Long. Nice and easy, isn't it? We're long. Let's hope we go long. S&P pre-market 5, same with the Dow, pre-market 10 on the NASDAQ today. FX wise, there's no ADRs. Sorry, yes, there is ADRs. What I'm talking about. I haven't closed anything. See, my brain's all over the place. I've got 1, 2, 3, 4, 5, 6 terminals open. I'm trying to manage at the minute, so my brain's a bit all over the gaff. Aussie New Zealand, big whipsaw on this one today. So big drop straight down into ADR. We've rallied off the CPI figure. So this was an ADR hit to the downside. You wouldn't have got into this. Yes, you would. Sorry, that's a lie. That was the reversal alert there. So if you got into that, you took that. You got 17, just under half an ADR out of that as an ADR reversal. And obviously we've just had that retest again. So we'll see where we go. So that was an ADR hit. Aussie dollar, US dollar is an ADR hit as well. There's absolutely no chance of getting a reversal alert off of that. It's all the way up there. That's the news. So you're not going to get into that today. New Zealand dollar, US dollar as well. Same thing. The ADR hit is caused by CPI. You're not getting in. So all the ADRs today that we've got are untradeable, unfortunately. RSIs, still no RSIs on the hourly, nothing to look at. Pound yen is the only thing that is still pushing from the 4-hour perspective. So we're still extended and embedded on the 4-hour RSI on the second leg. And it's still pushing a little bit. And euro yen is extended on the 4 as well. So again, not a lot of movement, not a lot of fast, aggressive movement, which is what we want. Hedged on the Dow. NASDAQ still running. Big spike up on the Dow there, look. Let's see what this US dollar is up to. So a little bit of strength coming through in the US at the moment, which is negative index. This isn't looking good today. I've got to go at 3 as well because I've got a doctor's appointment. So this is going to be a nightmare trying to manage this lot this afternoon. I shouldn't have got into these this afternoon. I'm in now, so I can't do much about that. So the downside hedge on the Dow, I'm going to leave exactly where it is. ADR, yesterday's low. So if we get a rally down into there, I'll exit that and look to get out. Upside on the Dow. Upside on the Dow is all-time highs. So that's a tricky one today, isn't it? Will we get a reaction at all-time high? It's a bit of an aggressive exit, that. Doesn't look like we're going up. I'm going to target the all-time high, which isn't actually going to be far on the Dow. That is 2R. So I'm looking for a push up 2R on the Dow for a reaction, which is just below ADR. If we are going to go long, can't do that because I'm going out. I'll leave it as it is at the moment. Because I've got to go out, I can't monitor this. So if this hasn't hit that by the time I go out, I will move it up to 150 ADR. And I'm going to assume that if we don't get that reaction, we're going to break the all-time high. If we break the all-time high, we'll usually rally out of it and make a new high. So we could get a push up to 150 today. So I'll watch that and monitor this until I go. S&P, Hedge, upside. So I just need to remove that button. I nearly pressed that tile windows button then and it drives me nuts. Just get rid of that. S&P, same thing. We're out into highs. So upside on that, I'm just going to leave where it is at 125. Which is 5R to the upside. So if we can push beyond ADR, just wait for some kind of pullback. Downside, it's going to be yesterday's low. So that weekly level and yesterday's low to the downside. NASDAQ, we're off on our way to target, so I haven't got to worry about that one. So nothing banked on the H1M5 at the moment. All I've managed to get into is yen. And yen isn't doing anything, so there's nothing I can get into at the moment. The only thing I've got on that isn't yen is euro pound, and euro pound is not going anywhere. Yeah, so euro pound we are completely sideways and have been since I got in. So nothing I can do with that one. Aussie dollar, New Zealand dollar. I posted this in the Telegram group. Brokers. So if you remember this morning, if you were in the live room this morning, I had two positions on. Yeah, one there and one there because the broker spread this morning, absolutely ridiculous amount, and triggered me into a short trade, although price was trading at 3/4 of an ADR away, right? So I said, I've got two positions on. It's a happy problem to have because prices move down. So I'll leave those as they are, but I will protect that second position with a break-even stop. So I put a break-even stop below my entry. News triggered. CPI traded up to there. They spread the market all the way up to there. So not only did they not honor my break-even stop, they executed my order up there, right? So my order was executed 5 pips higher than I asked them to because they spread it at CPI from the high 95 points. So 9.5 pips. So there's a 10 pip spread above the high of the candle that they used to take me out. Remember we were talking yesterday about brokers and what they do and that software they have I told you about where it's got levels on the chart, price points. And next to each price point, was it yesterday or the day before? I can't remember when I was talking about it. But next to each price point, there is a dollar amount. Yeah. Which means that if price moves to a certain level and they spread the market by X distance, they will make that amount of money. That is exactly real life example of what I said about happening. We got to there, they spread the market, they took my money. We never got anywhere near that price point. But the contract I've signed with my broker says, I would like you to execute my orders for me at the best available price that you can achieve for me in the current market conditions. Right there, they decided they would like to spread the market to there and execute, and that was the best price they could give me. Love them. Good, aren't they, brokers? So, yeah, there you go. $23 loss for a stop loss that was actually break even, should have made me $1, but made me $23 loss because they decided they didn't fancy execute me at that price. So that's the ADR reversals account. Nothing's moved from those ADRs yesterday. H1 hedging, I've got one hedge on and the other 5 positions are sitting there, haven't gone anywhere yet. So New Zealand dollar CAD, we looked at this one this morning as well. So New Zealand dollar CAD, we had a reversal alert short, which triggered there. And then we sat around and we had a reversal alert trigger long there because we are literally range bound. So at the moment, we're back in the middle of the range. Nothing's moving. Again, it's just this market at the moment. This price, this New Zealand CAD is a prime example. This is just the market at the minute. And actually, I think the only thing you can really trade at the moment is 1-minute charts. And as soon as the market decides to move, those 1-minute charts will kill you. But nothing you can do. We're stuck. Absolutely stuck. It's going to be one of those days. I can see it. Look at the NASDAQ. It's all I wanted, Nas. It's all I asked for. Just a couple more pips. Just to put some money in my bank account and feed my children. What did you do? You just went shy of it, and now you're going to hedge me. Sorry for the sarcasm. It's been one of those days today. And relax. Outro. Hello. I got out this morning's hedges early, just so I didn't take a loss. Good man. Plus 0.3. Good job. Not taking a loss is half the battle. Brian, broker won't allow because Chuck Norris is working for them, apparently. Yep, I saw your post. But that sums brokers up. You signed this is the thing that gets me with trading, and it's always been the same ever since I started trading. You've got no choice. You have to get access to the market somehow. There is only one route to market. They have a monopoly, a broker. You can't access the market in any other way unless you're trading futures, in which case you deal directly with the big boys, the CME. Other than that, you need a broker. And your broker forces you to sign a contract that says, we can do what the hell we like with your money. It's a very hard job, this, you know. And this isn't the first time I've shown this. I've shown this many times in live streams. This activity, shall we call it. NASDAQ's retested the high of CPI. And we are running into a little bit of resistance up there. So this is the propulsion move from the open. And we are retesting that. So let's see if we got these guys that undid CPI. Let's see if this is a speculative move long, or if that US dollar is going to rally, which it looks like it is at the moment. Euro US dollar probably on the move. Yeah. So strong US dollar. Strong US dollar coming in at the moment. That's unusual for the opposite to happen. So the indices are coming down at the same time as the US, which is not the norm, but we'll see. Ugly open today. Yeah. Market's just ugly at the moment. I'm in another trading group with in Telegram with some old, just kind of old friends that from years ago in trading. And we're all bitching about it this morning. Like, hey, when you get this thing moving, how can we make money when the market's not moving? Blah, 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 blah. Everybody's in the same boat. Everybody's struggling at the moment. It's very hard to make money when the market's like this. You've either got to be in and out super, super, super fast, or if you're any kind of trader that uses any kind of movement that isn't intraday, everybody's in the same boat. We're just stuck. So we're waiting for something, and I was hoping the CPI was going to do it, but so far it doesn't look like the CPI has actually made any difference whatsoever. So might be another week of it. If we look at the news coming up, we got GDP for the pound tomorrow, and then we got PPI tomorrow for the US. So PPI is basically the kind of commercial version of CPI. It's the producer price index rather than the consumer price index. So it's business's version of inflation, if you like. So that is important. So we may get some deviation on that tomorrow that might change their mind. Unlikely, but we might do. Other than that, there's no news tomorrow. So we're going into next week's CAD CPI. We got retail and unemployment, but you know, there's nothing major next week that you can look at and go, oof, that's what we've been waiting for. We've got to wait until the inflation figures come out and all the PMIs. So Bank of Japan is the first to go on the 23rd, end of the month. So tough start to the year. Pulling teeth. Right, so we're pulling back on all the indices at the moment. So we've retested the CPI highs, which have all rejected. Yeah, so this is CPI. And we've just retested CPI and we're bouncing. So we'll see what happens here, whether we drop or pop. If we drop, we're going to be looking for downside targets at yesterday's low and previous day's low. Yeah, so those are your targets to the downside, where you're going to find some support, which will help you get out of these hedges. Same with this one. If it hedges, I'll use yesterday's low, which is just beyond ADR. Got to be careful on this with margin as well. I'm running these with 0.25s. If all three of these get hedged and all three of them exit shorts and all three of them re-hedge, do an aggressive exit, that margin is going to be virtually gone. So I've got to be very careful with these. I might go back to Robo. So what I might do is just trade FTSE and DAX on Darwin X, because they're the only people that got the FTSE, and I might switch all this back to Robo. Just because I can't. A triple hedge is hard to retrade. No margin. What can you do? Out the NASDAQ break even. Good job. These are the opens who want to make me chuck my keyboard out the window. Yeah. Afternoon, Themba. Might not be a bad idea to have taken that break even today on the NAS. Feels like these markets are on life support and they're about to flatline. They're either going to flatline or they're going to spike like a lunatic. And that's what worries me more. If we go into a massive squeeze on something, there's nothing I can see that could squeeze though at the moment. There's no news that is good enough to move the US dollar. There's no reason for the pound to go anywhere at the moment. There's no reason for the euro to go anywhere at the moment. The Canadian dollar's just dead. The Aussie markets are weakening. And the Japanese said they're going to increase their interest rates. So the only thing I can see short term in the next 4 to 6 weeks actually having any chance of rallying is the yen at the end of the month, which at the moment is weak, which is, you know, what we would expect. You weaken ahead of the news. Market entices the opposite direction before the news event. So it's all adding up to the yen being the first mover. Who's going next? That's what we're waiting for. And I think there was some news this morning, actually. Traders of the futures tied to Fed policy rate reduce bets on a March rate cut. So this is what we were expecting. March was going to be the first quarter point drop. They're now saying that's less likely, more like April. Fed swapping less monetary easing in 2024. So if we don't go in March with a quarter point, we're not going to come down by the 1.25 to the 1.5 forecast. We might just come down by 1% next year instead of 1.25. You know, it's all very touch and go. Some ECB news coming in. Ideally, rate cuts will come in 0.25% increments. Yeah, always do, always have. Why would you change that? No one would. Once cuts start, half-point moves are not excluded. So this is what I was saying about last week with inflation. When you look at the interest rates and inflation at the moment, I've just got to keep an eye on time. This inflation figure, the target is 2%. The euro is at 2.9. So what they're saying there is we're sitting at 4.5. We're bouncing. So inflation, everybody's inflation tends to bounce. So you see the US dollar's starting to go up. So we've been dropping nicely. And what you do is you come down, same as market structure, you come down in bounces. So what they're saying is we're going to start with quarter points. So we'll drop down to 4.25. And assuming this doesn't come down too quick, we will carry on going in quarter points. And it probably be every month, every other month. However, if this suddenly drops down to 2.1, that's too close to target. So they will then go, right, screw this. We're going to go 3.75. If they do that, the euro will drop hard. Whoever drops in 0.5% increments, you get a hard drop. So basically what they're saying here is kind of a shot across the bow. We're going to start to drop in 0.25% increments as you've been used to on the way up. But if things go too fast on inflation, we'll drop the halves in there and the halves are going to hurt. So squeezes. Microsoft overtakes Apple as the most valuable firm by market value. Nobody's buying iPods anymore. Hedged on the NASDAQ. Oh, what a day. Some days you just want to go, reset. I'm not trading today. That's what I should have said this morning. That's what I should have said this week, to be honest. One of those weeks. Does the NAS typically go up as the Dow goes down? No. The Dow is a little bit, the NAS and the S&P tend to move together. The Dow has a little bit more of a life of its own. If you scroll out on the charts and you look at the price action on the instruments, you can see how different they are. So you tend to get a similar move, but I mean, look at the size of that compared to that. And that wasn't, I mean, that was like that rather than collapse. Yeah, that was a collapse. That was an orderly drop, down, up, down, up, down, up, down, up, sideways for a bit before it got to the base, and it didn't break that low. Whereas the NASDAQ and the S&P did. So the Dow is stronger. The Dow is stronger because the Dow only contains 30 stocks. Therefore, the volatility is lower because there's less stocks. So therefore, it moves a lot more solidly and it's less volatile. The NASDAQ obviously has got 100 of the highest value, fastest moving stocks on the planet. Therefore, it's lunatic. The S&P has the 500 most stable companies on the planet. Therefore, it's orderly. So they've all got different personalities, but typically, as you can see, when you sell, you sell. When you buy, you buy. So stock movement is generally done in sectors. So you'll buy the medical sector, you'll buy the tech sector, you buy the motor sector, you buy engineering, manufacturing, etc., etc. And these all will contain varieties of those stocks. So, for example, if the manufacturing sector declines dramatically, there will be elements of tech that supply manufacturing. And if manufacturing stocks are dropping, tech stocks that supply manufacturing will also drop, which is why they move in sync, because one sector influences another. Motor sectors are perfect example. In motor sector, you have car manufacturing, which requires a lot of steel, requires a lot of plastic, requires a lot of technology, screens, electronics, gold. Yeah. So when you're making a car, every single sector is involved in the manufacture of that product. If the motor industry drops dramatically and everyone goes, we can't buy new cars anymore, all sectors will suffer. Airline, reliant on steel. Yeah. So this is why they're all synchronized. But when you get a strong move on the US dollar on its own, that will drop all indices at the same time because they are all priced in the US dollar. And if you want to buy the US dollar, you need to access capital. Capital is tied up in stocks. So if you want to liquidate to buy the US dollar, you need to liquidate stock to buy dollar. Yeah, that's why these tend to do the inverse to the US dollar. Same with the euro and the DAX, the pound and the FTSE. But it isn't always the case. There's never a you can always show an example of when that didn't happen. The US dollar at the moment, look, or was, I don't know if it is now, was dropping. Was pumping, sorry. Yeah. So the US dollar is rallying. US dollar's going up, stock market will tend to come down. So if this now pops, you'll see the stocks will probably rise. Because there's a lot of volume going into the US at the minute off the CPI number. So I am hedged on everything today. One of those days today. It's going to wipe out my week. Well, it's not actually, because I'm only 2% hedged, so it's not the end of the world. Tough week though. So NASDAQ downside. I'm moving target to yesterday's low. So NASDAQ's really good. Solid target, look. So we got yesterday's low, which is a double bottom, which is this area here we tried to sell into the day before. This is a resistance. Yeah, previous level we have reacted at. And then we've tested that multiple times. So basically this area here, we tested, we rallied out of it, hit it, tested. No, we're not going south, we're going up. So this propulsion gap is really good, strong support. So target the top of that propulsion gap to the downside. So if we go down, we expect to bounce out of that. Upside, I'm going to go with the monthly high from December. So just below that, ADR basically. So NASDAQ ADR to the upside and just over ADR to the downside. Dow, all-time high out there. So that's the upside target. Downside target, yesterday's low. Look for a bounce out of that. S&P. Yesterday's low, just beyond ADR. This propulsion move, which we've tested, and then we had the Globex session. We sold, bought away from it, tried to get back through it again, popped. So that's a really good support. Turned resistance, turned support. And we sort of accumulated at that area. So we know this area is good. 57, 55. And upside, I'm just leaving at 125 ADR because we haven't got an upside target. So looking for just a decent, strong move out of the highs. So if we are going to break this high, which we tried to do this morning and failed, we will probably break through it, pull back, and then we'll get a bit of a rally while the market decides whether or not there's enough buyers to break out and stay broken out. In which case, you've just got to put your finger in the air and wait. So I'll get out there. And obviously, if it continues to push, we'll be trailing a pending order, waiting for those sellers to come in and try and get out on the sell. So it's going to be a tricky afternoon. Unfortunately, I'm not here, which is very annoying, but nothing I can do about that. I will be back about 5-ish, and then I've got to go out again. So I'll be monitoring this on and off throughout the afternoon, but the EA will take care of everything for me. So I'll just let that run. So there is a chance that this is a bear move starting on the Euro US, i.e. bullish US dollar. So we'll have to wait and see what happens this afternoon. But stuff is potentially pulling back. Look, so we have tried to push back, and the dollar is pushing against. Let's have a look at the pound as well. Yeah, so the pound's doing the same. So the pound has tried to push back up, but the dollar's certainly in control at the moment. So there is bullishness coming back on the dollar, which is obviously off the back of all these good numbers. So unemployment started to come down. If unemployment had gone up, that would have put more interest rate reduction pressure on. So all these figures that we've got today are, it's okay, you don't have to reduce interest rates. Every single one of them is saying no pressure. So there is no pressure. So therefore, that's good for the US. If the interest rates come down, it's bad for the US. If this data is saying you don't have to reduce your interest rates, it's positive. But it's positive for the next 3 months. We all know it's happening. We all know it's coming. We all know that's going to drop. So is the market bold enough to try and rally the US for a couple of months? Or are we just going to do what we've done for the last few months, which is sit there like that and just wait? I hope not. I don't care which way it goes. I just want it to do something. We just need some movement in some direction, some form. We are back at the middle of the range. Yeah. It's a month now. This is the 13th of December. We're on the 11th of January. This is an entire month. What do you do? It's just painful. But it will change at some point. Feels like the markets are on life support. Yeah, just cover that. It's infuriating how scammy these brokers are. Nothing you do. Yeah, they're not scamming. They're not scamming at all. This is normal behavior. This is why I don't use stop losses. Yeah, I don't see this very often. This behavior. Because I don't use a stop loss. Yeah, you only see this when you use stop losses, and when you see this, when you use stop losses a lot, you see this a lot. This is totally normal behavior. Yeah, they have software that tells them when to do it, where to do it, everything. This software is brilliant. It's a piece of kit that says how much money do you want to make? This, or this, and you go, I'll make that. I'll be nice. I'll just make that today because I've had a good day. Oh, this guy's not doing very well. We'll just make a little bit off of him. That is what their software is designed to do. They call us numpties. There's a seminar on YouTube from the guys that produce the software for brokers. And he stands up and says, we have got something that is going to milk those numpties for you. We've got a new update. Yeah. They call us idiots. Quite rightly so. Who in their right mind would put an order in the market to say, take my money away? We are idiots. Anybody who uses a stop loss is an idiot. I've proven it many times. Proven it there. But sometimes you have to use them. Aggressive drawdown control. We need to use them. You have to use them at some, they have a use. Just don't use them that often. I would go to futures if you could trade them on MetaTrader. You can trade them on MT5. You can try. Yeah, so basically somebody's had a problem in their MT5 taking trades at the wrong times. So they've sent me their set file, which I've set a test up. And it's trading absolutely perfect, doing exactly what it should do. I can't get it to go wrong. So there is a reversal alert there. It took a trade on the reversal alert. There was a reversal alert there. It took a trade on the reversal alert. Euro US dollar. We had a reversal alert. It took a trade long. We had a reversal alert. It took a trade short. It's doing exactly what it should do. So I can't this problem that people have where they're saying it's taking trades at odd levels. It's a magic number issue. I cannot replicate the problem. It doesn't happen. To me, anyway. I can't break it. It's doing exactly what it should be doing. All the global variables are exactly as they should be. It's all just working. So I can't fix what I can't break. Just the fact that they know almost all their clients will lose money and they have the cheeks to pretend to offer trading education. Yeah, like they have your best interest in mind. Yeah, their interest is in nothing but you pressing the button. You press the button, you pay commission. You press the button, you pay spread. You press the button, you pay a swap if you hold it overnight. Their job is literally to get you to press buttons. So their education is all around low time frame scalping, because the more you press the button, the more you pay them. It's all they're interested in. Make sure you use a stop loss. Make sure you use risk reward, because if you don't, you could blow your account. If you do, we will take your account anyway. So here you go. Here's all the education. Have it for free. This is how you press buttons in a piece of software. Well done. You're doing really good at pressing those buttons. Keep going. Oh, you've run out of money. Okay, next. Come over here. I'll teach you how to press buttons. Great business, isn't it? Absolutely brilliant. I would love to be a broker. Just licensed to print money. Afternoon, Yotko. You never considered building your EAs for futures and trading the indices via futures instead? No, because there are EAs out there for things like, obviously you can build things in TradingView, but for NinjaTrader, there's lots of automation tools available. But futures is FIFO, so you have to use a stop loss. You cannot hedge. It's a different thing. It's more about futures is more about reading the market, reading the ladder. You're trading ticks. You're not trading. I mean, people do trade candles in futures, but you're trading price action and momentum only. So it's not as suited, I don't think, to algo trading. And also, there's none of this lot size calculation. Your risk is in contracts. You have 1 contract, 2 contracts, 3 contracts. You know exactly how much every tick is valued at with a single or a double contract. It's all it doesn't need automation because it can all be done very quickly and manually, and every order is executed in microseconds. It's like press the button, you're in. Yeah, you're filled. You're part of the CME. It's a different thing. There's not a lot of automation because it's a manual job, which is why I don't do it as much. I love it. I do love trading futures. It's so exciting and you can make so much money, but you can also lose so much money. Very exciting industry. But I haven't ever built anything for any other platform. Exiting NASDAQ shorts, 1755 banked. Well done. Wrong one. I'm out of the shorts on the Dow. I'm just about to get out of the S&P. Cool, this is coming down hard, isn't it? 305. Yeah, so very strong moves on the US dollar. US dollar rallying pretty hard at the minute. Okay, so I'm out of the shorts. We're over ADR. We've hit ADR there. We're approaching ADR there. That's just missed getting me out of those shorts by a whisker. I might close those out manually. Okay, so just going to let the EA run and try and get me into an aggressive exit position. I've got to go out. I'm going to have to take my phone. Make sure I'm logged into the right account. Sec. Because I'm going to need to monitor this. Account. So mobiles do actually have a use for trading, but don't try and trade on your mobile all the time. But for emergencies where you're in situations where you've got to get in and out of stuff while you're on the move, it's good. So I've still got 250% margin, but as soon as I get the first aggressive positions on, if those aggressive positions turn around, that margin will disappear very, 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 very quick. So got to be a bit careful. Be a bit careful of this because it's dropping like a rock at the minute. I'm not going to re-hedge any of this. I'm just going to let this run. And obviously, as soon as we get those pendings on, that's when we really need to pay attention. Looking good on my morning sell position on the NASDAQ. Good man. It's hilarious how you don't use a stop, and the one time you use it, they do you wrong. Yeah. That's why you don't use them. I don't use them because I don't like them. I don't use them because they lose you money. They lose you money if you're in profit on a position. If you use a trailing stop, the trailing stop gets you out with less profit than you had. And if it continues, it gets you out with less profit than you could have had. If you use a stop loss on a trade when you get into one, if price pushes up and then comes back down again, you get stopped out and take a loss on a profitable trade. If price moves your way and you move a stop loss to break even, price will pull back, break you even, and then go to your target, and you lose money. If you place a stop loss to protect a position and the broker decides they don't like you that day, they'll stop you out anyway, regardless of whether price gets anywhere near it. No one's ever shown me a reason that a stop is actually any use whatsoever in trading. I used to think they were, but show me a reason why they're good. I've just explained 4 reasons why they're bad. The only reason they're good is they stop you losing money by losing you money. I need one of those boards. Prove me wrong. So you exited manually that level. Would the spread still have got you out at a worse price? Yeah. Yes, if you press the close button, you would have got executed at the, well, depends if you executed when they spread. They wouldn't, when you press the close button, they don't go, this guy's asked for a close, spread it. What they're doing is they're spreading it to get the orders. Yeah. Your broker can see every order. You can see it in your terminal. They can see it in their terminal. They can see every stop loss, every buy stop, every sell stop, everything. They see your orders. They're all amalgamated into one big block of, there's a load of stops between that level. There's 27 stops between that level. If all of those people get stopped out, the cost will be X of their accounts. If I've taken the opposite side of those trades, that X becomes my profit as the broker. So they will execute you at the price available. So if the bid and the ask is there and you press the close button, you will get that price. They won't go whoop up there because you press the button. But if your stop's up there and they want to do that, they would do that. The broker software is called Bob 2.0. Yeah, Bob software. It's not. I can't remember what it's called. There's two main players in the broker market. I can't remember what they're called, but they both do the same thing. They provide software to allow brokers to see a window of money. Nas took my 0.5R profit stop and tanked to 5R. Meh. Not a lot you can do about that. Right, so I'm going to let those run. They're obviously going to run into drawdown. So I will be taking aggressive entries on those. I'm going to get the wife to drive me to the doctor's appointment so that I can sit and watch this on my phone in the car. because it's all a bit movie, isn't it, this afternoon? Right, few ADRs hit there, so I've got to disappear. So I'll be back tomorrow morning, 7:50 and 2:20 tomorrow afternoon for the New York session as usual. Good luck with those this afternoon. Be careful. They may well continue to run for a while, but they will at some point have a little bounce. So we'll see what happens. So is the broker to some extent front running? Not really, because they don't know where price is going. They quote what they're given. They quote what they can achieve, and they spread it. So if they get given the price there, they'll put a price there and a price there. Doesn't matter what you do. They make money every single click of the button. Bob 2.0 developed by Ed 209. There's a theme going. Right, I'll leave that there. We're at a weekly level here, and we're just at that daily support. So we'll see if they buy this up. They might get slammed today. If they do, watch these lower levels. We haven't hit that one yet. So there's a second support, which is under a quarter of an ADR away. So there's your backup plan if you need to get in a second entry on these. So we'll see where we go. All right, I'll be back tomorrow, same times as usual. Anything you need, I'll be in Telegram later. And good luck this afternoon. I will see you guys tomorrow.